Taiwan Semiconductor is down 38% over the course of 2022, but since their latest earnings report, they actually have climbed about 40% in the stock price, representing optimism in the underlying business, which puts them now at a market cap of 413 billion, a PE of just 15, and a dividend yield of 2.5%, with huge partnerships with businesses like Apple, Qualcomm, just to name a few, and with huge demand for their chips as more and more goods and services require better and more efficient chips. So why has 2022 been such a bad year for the stock? And is this the value investing opportunity we've been waiting for the world's largest semiconductor foundry? Well, make sure to stick around to find out as we're talking about all that and more on today's episode. How's it going? Welcome to Think Investing. I hope you're having a great day. Today, we are going to start with the full analysis into the fundamentals of said business. We'll go through the top line, bottom line, balance sheet, cash flows, etc. And finally, we'll use that information to predict a future outcome for TSM stock, as we'll plug the financials into our calculator seen on screen. So if you enjoy this type of content, make sure to subscribe, hit that like button, because we post on here regularly analyzing the businesses you are most interested in. And again, as always, make sure to comment below with the stocks that you are most interested in viewing. And with that out of the way, let's jump into the video. All right, and so they've just reported on their Q4 fiscal year 2022 earnings. What has caused that 8% increase in the stock price since reporting these earnings? Well, we can see here they had a 2% increase from the last quarter in terms of revenues. But when we look at this from a full year perspective, from the start of 2022, they've actually for this quarter had a 42% increase on those revenues actually from this period 1 year ago. Margins are strong, net income is looking strong. And so let's dive a little bit deeper on that. So let's start with the revenue by technology. We can see how this has progressed over the last few years, where their 7 nanometer chips have actually tapered off a little bit, but that is from their subsequent growth in their 5 nanometer chips here, which have actually really taken a liking from the market. And that's how this business is going to operate in the future, where the smaller the chips, the more technology they can pack into smaller devices. That means the better technology it is. That means it's going to be more widely adopted in the future. And that's honestly to be expected as well. If we look at this from a 2021 versus 2022 perspective, we can see that across the board, more adoption from those 5 nanometer chips from 19% last year up to 26%, while 7 nanometer chips have tapered off just slightly from 31% last year. The rest of their chips are going to have around the same demand going into the future. Now, if we look at this, we also have to take into consideration this is a business that is highly dedicated to the North American market here, with 68% of their revenues coming from the North Americas, meaning as long as there is demand in North America for chips, and as long as they remain the largest foundry in the world, I mean, they're going to see that consistent demand here for their products. And especially if they can more widely produce across the world, we can see higher numbers in other regions as well going forward. But for right now, as long as the Americas still need those chips, we can see TSM will probably do just as well. Now, when we break this down from a net income perspective, we came in with about $20 billion in revenue for this quarter alone. That works its way out to 62% gross margins, extremely strong, especially for a foundry business. And even better yet, operating margin here at 52%, super high, especially when we compare this to other big businesses. 52% operating margin is massive, and it's why this business is able to profit so well. Additionally, 41% return on equity, amazing numbers there. Okay, when we jump down here to our balance sheet, just note that these values are in the new Taiwan dollar, so take it with a grain of salt, but $1.5 billion in cash and cash equivalents on $2 billion of total liabilities. So extremely strong financial position here for TSM, a solid current ratio. So a lot of good things going here for TSM. Now, with regards to their cash flows, again, these are not reported in US dollars. So we'll do a conversion later on in the episode once we get over to our calculator. But for now, just understand that they were able to produce for this quarter at least $486 million from operating the business, less their capital expenditures, and they're left with about $150 million for free cash flow for this quarter alone, which we can see they've been very consistent with over the last few quarters and over the last few years as well. So you can consistently expect them to churn out this amount of cash flow every single quarter. Very good stuff there. That being said, we have seen a decrease recently over the last few quarters. Again, 2022 was a more challenging environment in operating cash flows here. But on the flip side, we've also seen that decrease in their capital expenditures. Okay, and we're going to want to see how these evolve over the next few quarters. Now, in terms of their upcoming events and announcements, they're looking to launch their 3 nanometer chips, and they're looking to ramp up production of these chips as they become more widely adopted in the future. So you can expect another surge in revenues once those do come online. And they're looking to expand capacity at its Fab 18 new construction site in southern Taiwan. They're also constructing another fab in Arizona here, where they're looking to begin their production of their 3nm chips out in 2026, which will cost them about $40 billion. But again, we can assume that once those 3nm chips do come online, we'll really rake in those costs there, likely within a few quarters. And then when we get down here to our guidance for the next quarter, at least they're saying they're going to expect between 16.7 and 17.5 billion US dollars in revenue. So if we add that here to our calculator at an operating margin of 52%, that'd be about $8 billion in operating income. Over the course of a whole year, they should be able to produce at least $30 billion in operating income by the end of fiscal year 2023. If we require a 10% return, they do currently pay a dividend. And if this business can grow in and around those, 5-year growth metrics that they have been able to add, let's just even be conservative and call it 8 to 7% on a 10 PE. They're currently trading at 15. So if we bump that up just a little bit, the stock should actually be worth about $123, where we're sitting at $86 currently. So a decent amount of upside from this current point in time for the world's largest foundry. Now, in the very best case scenario, where we see even further growth from this business, they're able to expand on their production and the global economy actually improves from this standpoint, then we can expect at a 15% growth rate for the first 5 years, that drops down to, let's just call it 8% on a 20 PE after about 10 years. Yeah, the stock should be worth more than a double at $200 per share. Again, I reiterate, $86 is the current stock price. So some massive upside there. But then in the very worst case scenario, imagine there's a ton of competition that comes into the space, as we do have with, Intel, who's building foundries in the state, and other competitors. Let's say they're able to take some market share away from TSM here. They're only able to grow at 3 and then 1% going forward on a 6. Let's just bump that up to about a 9 PE. The stock would only be worth $66 per share, and actually not too far off for a very worst case scenario with TSM. So with all of that in mind, please leave your thoughts on this business in the comment section below. Are you adding this to your portfolio now that we are down to relatively historical lows here, at least in recent history? And I mean, they have massive business. There is a bit of risk here, geopolitical risk with this business. We don't know what's going to go on with China and Taiwan in the future. That's something all investors should be mindful of, especially if you're thinking about purchasing this business. That's my analysis though for this business. Will we continue to grow higher? Will they start to stagnate? Where will this business go? Please leave your thoughts in the comment section below. But with that, I'll see you on the next one.